Well, the active component in the reference to active ETFs is effectively describing the nature of investment management. Unlike traditional exchange-traded funds where they track the composition of the actual makeup of the index, active refers to basically some fundamental research where companies are selected for inclusion in the portfolio, hence the name active. Well, fundamentally, Magellan created the active ETFs because we saw the success, basically since the mid-90s, of traditional passive ETFs. There's over $3 trillion invested in ETFs worldwide. So we kind of looked at that number and thought, well, what's going on here? Then we looked at our own unlisted managed funds. To invest in a managed fund requires about a 16-page application form to be downloaded. We need identification around anti-money laundering, and a lot of the administrative friction associated with investing in managed funds was taken away with the launch of the active ETFs a couple of years ago. So it was predominantly driven by administrative friction. ETFs effectively differ from listed investment companies, or LICs as they're commonly known, because the LIC raises capital and issues shares, and then those shares are effectively traded on the ASX. It's considered closed-ended. So they raise the capital, they don't raise any more capital. It's simply the shares that they issue get traded on the ASX. The key differentiator between ETFs, or even active ETFs, is that the LICs can trade at whatever the buyers and sellers choose to buy for and sell for. So the price can often have a disconnect to the actual net asset value of the portfolio. ETFs and active ETFs invariably track as closely as possible the underlying value within the portfolio. All the active ETFs that Magellan offer effectively mirror the underlying strategy of their unlisted fund counterparts. Yes. The underlying value of the portfolio is reflected in the actual close of the overseas foreign markets, foreign share markets. So when the ASX opens, what you've effectively got is New York is closed, London is closed, major Asian markets might be trading in that same time zone. So the value of the share or the unit that these active ETFs quote at the open of our market is effectively a reflection of the underlying value of the portfolio, given that the majority of the company's share prices that we own are not trading. So we can actually strike a very accurate net asset value at the start of the ASX trading day, and then the key influences during the trading day are obviously currency, any Australian shares that we might own within the global portfolios, and they're the key influences. Well, definitely the aim of the fund in the market-making function is to have the price that's trading actively being traded live on the ASX to reflect as closely as possible the underlying value of the portfolio. There are times where in market dislocations or extreme circumstances where there might be a slightly greater disparity between what it's trading at and the net asset value, but invariably the aim of the active ETF is to make the price closely reflect the portfolio value. So Magellan's active ETFs offer monthly updates, so there are fund updates available on the Magellan website. Over and above that, to the stock exchange, we release the full composition of the portfolio quarterly with a 60-day lag. So again, the transparency is very visible to investors in the active ETF market.